wanted to go
Thank
ahead
you.
and call the meeting to order.
Yes, ma'am. Thank you so much, Ms. Taylor. Good evening, counselors. Good evening, Mayor, and those who are on the line. Welcome to the city of Bessemer, Alabama. Fiscal year-end report ended September the 30th, 2019. The city of Bessemer list of principal officers: Mayor Kenneth E. Gully, the city council, Cynthia S. Donald, president, Latricia Crusoe, pro tem, Donna Thigpen, Kimberly Alexander, Jesse Matthews, Ron Marshall, and Jarvis Collier. Mr. Pitts, are you on the line?
Madam President, may I call roll, please,
Yes,
before we get
ma'am,
started?
you can. Yes, ma'am, you can.
Okay. Councilor Alexander? Councilor Alexander? Councilor Collier? Councilor Collier? Councilor Crusoe?
Present.
Okay. Councilor Marshall?
Present.
Councilor Thigpen? Councilor Thigpen? Councilor Matthews?
Present.
Councilor Donald?
Present.
You have 4 present, 3 absent. You have a quorum.
Thank you. Mayor Gully, are you on the line?
Yes, ma'am. How are you this evening?
I'm good this evening. How are you? Is Ms. Pryor on the line?
Yes, ma'am, she is.
Yes, ma'am. Yes, I'm here.
Okay, and Mr. Pitts, is he on the line?
I heard somebody say, yes, I am, but they sound like they was way down the road. Okay.
Ms. Taylor, do you by any chance see Mr. Pitts?
Yeah.
No,
Right
ma'am.
here.
Okay.
Hey, Mr. Pitts, how are you?
I'm doing very well. Good to see we're all one big happy family together again.
Oh, yes, sir. You know I love it here in the great city of Bessemer. Mr. Pitts, the floor is yours.
Okay, thank you very much. I'm Eugene Pitts with the Principal and Associates. Now, be giving a overview of the city of Bessemer's 2019 audit report. I'd like everyone to turn to page 1. And that on page 1, we have the auditor's opinion. This opinion goes from page 1 to page 3. This is the only thing that the auditor owns in this report. The financial statements are the responsibility and the ownership of the city of Bessemer. My responsibility was to opine on those statements to state whether or not they were fairly presented in some form of an opinion on the general accepted accounting principles. On page 1, that's stated in the section called management's responsibility for the financial statements to state that management is responsible for the statements. The third dark bold print states the auditor's responsibility. And that responsibility that the auditor has is to express his opinion on the statements. Now, the most important thing is the auditor's opinion. If you look on page 2, where it says qualified opinion, to be the third bold print from the top. Most instances, a city will receive a unqualified, meaning that there were no issues with the financial reporting. And so therefore the auditor was able to say that the statements are fairly stated. But because Bessemer's financial report includes other component units like the airport, GUSA, the library is blended in, and then you have the utility department. The reason you have what's called a qualified opinion is because all those entities had a full audit except the airport. The airport only has a review. And then the airport has a review year in and year out. And this is what your opinion has said in the most recent years, because the airport does not have a full audit. It stops the city of Bessemer from getting an unqualified opinion. It simply gets a qualified opinion, and it states that in the opinion. And if you look at the second bold print on page 2, it says basis for the qualified opinion on the aggregate discrete presented component units. The financial statements of Bessemer Airport Authority have not been audited, and that's the issue. Not a real issue for them, but this is why you have a qualified opinion. And we were not engaged to audit the Bessemer Airport financial statements as part of our audit of the city of Bessemer's financial statements. Bessemer's Airport Authority financial activities are included in the city's basic financial statement as a discretely presented component unit and represent 10%, 20%, and 18% of assets, net position, and revenues, respectively, of the city of Bessemer's aggregate discretely presented component units. So hence, because the airport statements are not audited, they are reviewed, which is substantially less than an audit. You cannot receive a unqualified opinion on the overall financial statements of the city of Bessemer. You turn now to page 4. Page 4 is the management discussion and analysis section. And it gives an overview and financial highlights of the activities of the city. And I'll just read a few of those highlights. This section here was prepared by management. That's why it's called the management's discussion and analysis, and is based off the financial statements. In the highlights section, we'll just talk a little brief about that. The city government activities net position increased 5.2 million in fiscal year 2019. The city decreases outstanding warrants by 2.5 million, paid down the debt. The general fund had an unassigned fund balance of 10.5 million in 2019. And so the city is looking fairly healthy. From there, if you turn to page 7, it shows the revenues of the city and the expenditures of the city by type, and it compares each year, 2018 and 2019. One of the hallmarks of the management discussion is analysis is that it does do a comparison between 2 years. This is the only section in the audit report where you would see comparative information presented. Let me get you now to get out of that section and get to page 14. And on page 14, you have all the city's assets along with its component units. You see across the top, you see government activities. That's basically City Hall in the general fund of the city. Then you see business type activities. Now you're getting into the utilities, and Gusta, they operate as business type activities. And then you get into the component units, is where you have the airport and Gusta at. And those units also operate as proprietary type funds. You look at the total cash of government activities, the city of Bessemer had $17 million in unrestricted funds, $17,048,940. But restricted cash, $813,631. Those generally deal with your special revenue funds, monies that's set aside when you do a bond offering that's supposed to be used for a specific purpose. You got your 7-cent gas tax fund, your 4-cent gas tax fund. You have your grant revenues. All of that money there is restricted for a specific purpose of the city. You go down now to the captain that's called non-current assets. The city's net capital assets of all the equipment and so forth in buildings, including roads and streets infrastructure, you have a net $67,622,870,000. Overall, the total assets and deferred inflows and outflows of the city combined is 110,000. That's at the bottom. 110,468,390,000.
Excuse me, Mr. Pitts, real quick. When you said the 67,000, 622, 870, did you include the paving of roads in that?
Yes, all of that's included in the fixed assets section.
Okay, thank you, sir.
All righty. I want
Mr.
to
Pitt,
yes, ma'am.
Mr. Pitt,
Yes,
that last figure of 110, repeat that, please.
The total assets and deferred outflows of resources of the city of Bessemer, which combines all your assets that you have, is 110,468,390. 110 million. Thank you, man. 110 million.
Thank you. That's why I
468,390.
wanted to repeat it again, because that wasn't the right number. Okay.
That sure wasn't. It's 110 million. That's a big difference. I want you to turn to on the page 16. And this is the format that's different than what you're accustomed to looking at as far as your revenues and expenditures. This is a statement that was presented to the county community several years back. And what it shows is all the expenditures of the city at the top, and then the revenues are at the bottom. And this was developed in England. And someone in the American Institute of Certified Public Accountants went over there and decided that they wanted to make our statements look more like for private company statements, but this is the format that they came back with to do it with. And so I'm going to talk about this a little briefly, because it's not easy to directly to understand, because it's upside down. And if you just start at the top here where it says program revenues and expenditures, if you look to the side where it says activities, it's showing the general government, law enforcement, fire, public, health and welfare, recreation, and interest expense. It's showing all the expenses. And what these expenses, they are not in the format of the general fund. They are placed in the format of a for-profit organization, just like the utility and the airport in Gus, but it's in a different format, because within this, you have depreciation expense, which you do not have in governmental funds. And so these numbers here, they give the real total cost of operating the city that could actually be compared to a for-profit entity. Now, the uniqueness of this is that if you look at the section that says general government, then you see charges for services. Each function of the government or each department could also be generating revenues as it does business. Like the city issues business licenses, the city issues permits, and so whatever charges that the city can charge for whatever it does, it got some things that the rent outs dealing with the cemetery, get a little fees for that. Well, that money comes in and it offsets the expenses. So if we just look at the general government, we say the total government expenditures were $17,406,854. And then the charges that it was able to bring in for some services that just City Hall just provided, that could be permits, license, like the cemetery, the whole 9 yards. It brought in $81,001. Well, that offsets the operations of the general fund because it was able to collect some money. Then it also got grants. If you go over to the next column where it says operating and contributing grants, it shows grants that came in, which also offset some of your costs, because some payroll can go through grants, and some expenditures for other activities that you get grants for. Well, that offset, if the grants is used in the general government, that offsets some of the cost of the general government to provide services and resources to the city. And so when you go all the way across, it shows a negative 16 million. I'm in just that one column, governmental, general government, because all of them work the same way. But I'm trying to get you to see how this flows because it's so different. You see $16,434,086. They're saying that for general government, your actual expense ended up being $16,434,086 as opposed to the $17,406,084 that you started out with because you had revenues that came in that offset your expenses that were not taxes. That's the uniqueness of it. None of this right here includes tax, sales tax, or occupational tax, anything like that. That includes something that department was able to generate, were able to apply and get grants, or some services that department was able to apply. So we're going to come down now from the total and come all the way down to where it says general revenues. And that's where you will see the sales tax, occupational tax, and all the other revenues that would have came into the city, where that's accounted for. It wasn't accounted for in the departments. And so when you come all the way down to the part that says change in net position, you'll see the net position of the overall city with all the component units and the primary government, business activities. Still, the city ended up having $8,862,140 in deposited. That's whole government. Now, I'm going to get off of this statement because that was a good overview for you to sort of track, to understand that it's read from top, and the top is just showing the expenses, and then the bottom is showing the revenue that's collected by sales tax, and not necessarily by the department, because the department does not, collect sales taxes. So I'm going to move from that page unless anyone has any questions on that page. Thank you. Now we're going to go to page 17.
I made a question, Mr. Pitts, I'm sorry.
Okay, no
so
problem.
That is in parentheses, that's minus. Those are
expenses. That's right. That's why they got a minus sign around. That's okay. The expenses. And the revenues at the bottom, they don't have a minus sign around them. And that's the revenues.
Okay, gotcha. Thank you.
Great point. Thank you for pointing that out. Now, that statement that you just got through looking at, the two statements we've talked about, the statement of net position and statement of activities, those statements are in the format of a for-profit entity, not governmental, so that your financial statements can now, when they're doing your bonds, they can look at the city operating similar to how they look at the financial statements for a regular business, because those financial statements there are designed to do just that. They include depreciation expense, they include your debt and your fixed assets and all that type of stuff. Now, the statement that we're going to now, page 17, that's the normal statement that used to be in place for years. So you got two sets of financial statements in here. This statement here on page 17 is the government, pure government, because the government accounts for everything based on the utilization and the availability of resources. It doesn't get into considering things that it does not have to spend, because it's got a lot of budgetary controls that go along with it. There were no budgetary controls over the other statements that you looked at. They just come together and they are what they are based on the operations. So here in the general fund, just the general fund alone, and I want to talk about the general fund because that's the fund that you're most familiar with. And that's the biggest fund. The general fund had $13,331,498 in it to operate. And that's impressive, but we're talking about 2019. We gotten started on 2020 preliminarily, but those numbers going to be different because those numbers going to be more affected by COVID in terms of what the operations were like. You look at your accounts payable back then, where it says liabilities, at $4,048,980 in accounts payables. And so, but you had plenty of money to be able to cover all your bills as they would have become due. Gonna leave that page, go to page 19. Page 19 again shows the general fund and the debt service fund and the non-major fund. Your non-major funds have all your little special revenue funds in it, like forcing gas tax, uh, uh, any judicial grant that would have come in, anything dealing with the rehabilitation programs with houses. And we'll look at those little funds in a minute. But all those are accounted for in what's called, the column is called non-major. The column in the middle that says debt service is strictly for to pay the debt, the bonds off of the city. And then the general fund is the fund that you operate off of, pay payroll out of, collect money off of the city. And this is the fund that traditionally that governments use. And what the reason that you have two sets of financial statements, government wanted to keep its old format. And the American Institute of Public Accountants wanted to have the new format. So they decided to put both in, which means that you have double the financial statements in, but they serve in two different purposes. One serves the traditional purpose of government is to provide goods and services and not necessarily to operate as a profit, but at the same time be able to maintain the upkeep of the city. The other format is a format that's like a general regular business. That's why you have your roads and your streets that you talked about, streets being repaired and all that type of stuff. It's accounted for over there in the fixed asset section. That's not accounted for over here in the governmental section. On the governmental section, if you go down to a line under expenditures that says capital outlay, 1,687,792. That's when you pay out of the general fund to get those roads and things fixed, and out of other governmental funds that you have. That's just showing what you paid for them, but the actual asset themselves were accounted for on the other funds that we had. And so, if we take the total revenues, just the general fund, $57,832,855, and subtract the total expenditures, $57,158,614, that left you with a net revenues over expenditures of $674,271,000, which is good because it shows that you're able to operate and then have some left over, which looks favorable when you go to refinance your bonds. And so that's just was a good thing. Now, let me flip back one more time to page 17. Now I'm flipping back to show you something that's going to be just astounding. If you go in the total governmental column over here, and at the very bottom, it shows total assets of $27,879,269, which is different than the 110 million that we just looked at, because it does not include any fixed assets. It doesn't include the buildings, the property, the equipment, or anything on this statement. None of your infrastructure. And that's the distinguishing difference between the two statements. The other statement that we looked at first is more robust and it picks up everything. This one is primarily designed for the city just to be able to operate and be able to show its assets like this. It shows these are the liquid assets pretty much we have. Then it shows your payables and your payroll, what would be due to another fund and what we have to pay out. And boom, you're done. That was just the old way of I'm doing it. So the new way does give a better picture, and as the years have gone by, it's getting better and better with the presentation, because it gives a investor, gives the grant writers, it gives the underwriters who writing the bonds for you, it gives them a real good picture of exactly what the city owns and how the city is operating. And Bessemer looks favorable in this year. So now I'm gonna speed it up here, and I'm gonna go now to what we consider to be some items that need to be pointed out to make the system work a little better. So let's turn now to page 101.
Okay, as we,
101. Go
excuse me, as we move on, Mr. Pitts, I heard you mention about revitalization and revamping of properties or homes in the city. Which line did those funds come out of?
Great, thank you. That's going to be, that's in your non-major funds, but I have the detail of that broken out so that it can be a little clear. I mean, a little bit more identified. So let me pull to, you go to page 89. About at 89? 89 listed the non-major funds that were all summarized as non-major at the top financial statements that we actually issue the opinion on. We do not opine on the non-major funds because they're not directed material to the financial statements, but they are included. And the stuff for community development, that's going to be in that first group of funds that you see on the special revenue funds. It says community development fund. And under that, it has $779,000, $779,015 in cash in that fund. It shows that it has loans outstanding of $1,627,450. Then it shows deferred loans that people can start paying on at some later date, $459,564. So the total assets in that program dealing with home improvements and things of that nature with HUD is $2,866,029. It has very few liabilities, accounts payables, meaning that it's, when it does a project, it's paying what it was going to pay related to a program, $17,399. It has funds due to other funds of $754,421. So that fund is in pretty good shape. If we flip to page 90, it shows the actual grant money that came into that fund. That was $632,835. Then it had other monies to come in of $170,891 for total revenues that came to community development fund of $803,726. All the money that went out to the program that was spent, it was $1,494,044. So it's been operating like it's supposed to operate. It's been helping the community. It's been doing rehab. Individuals have active loans that participate in the program. And so it's doing pretty good. And the rest of those small funds that we were talking about, the 7-cent fund and police grant, all those are what's called non-major funds because they're not directed material to the financial statements as a whole. They're small funds. They're not like the general fund, your debt service fund, which is what most of your big activity happens at. They're just accounted for as non-major. And then this is the detail to the non-major, Councilman Consigliere Crusoe, that goes into what makes up that. Any questions? Okay. Let's go now. We'll just go from page 96 and 97. That reports on your compliance with your grants. We had no issues with that. You complied with the contractual agreements that you signed in order to operate every grant that came in. On page 2, it talks about the internal controls, and there were some ways that we feel that that we observed that controls could be improved a little bit. And so that's, now we're gonna go on to page 101 and talk about those items right quick. Finding number 1 that says 19-1. During the process of the audit, we observed that the city had been recognizing transfers that came from the utility department, transfers that one paid part of the mayor salary, and transfers of monies that went into the general fund to augment the city's general fund for operating purposes. But these are cash injections. This is not revenue, because if you report that as revenue, then you'll be overstating your revenue if you do that. And so,
and what page are we? Excuse me about that.
Page 101.
101. Thank you, sir.
And so that money comes in. It comes in as a transfer. It's recorded as a transfer in, and then you debit your revenue. I mean, you debit your cash, because that's all it is. It's not an expenditure, nor is it a revenue. It's only a transfer of cash from one department from the other. It's the same as you taking money out of one of your pockets and putting it in the other pocket. It didn't make you no richer. But if you counted for his revenue, then that's what you would be doing. You would be recognizing, twice. It was revenue at the utility, then you recognize revenue over here. So that's been corrected. That's been identified. And so that's fixable, being fixed now. The next finding that we have here is, in your financial report that we just looked at, is not accounted for as revenue. That's been corrected. It's accounted for as a transfer in. Finding number 19-2. This was something that was not, again, was not anything to be overreactionary for. It was dealing with looking at revenue, just like the one that we just got through talking about. Revenue is an area of focus when we're doing the audit, because we want to make sure that we get revenues right. If we don't have revenues right, then that could be an issue, because we could be not quite saying that you doing as good as what we think you're doing. So revenue is an area that we look at just for sensitivity reasons, for that reason. And so we pulled a revenue report just to see what is total revenue, and wanted to compare that to the revenue that you prepared in your general ledger. And what happened in that is that one report did not capture all the revenue accounts. There was no money missing. All the revenue was accounted for, but the two reports were supposed to be in sync. Because when I pull something that says, I want to see just all the money that comes in, all the revenue, I'm going to take that detail and see, what do you have in your general ledger? Because your general ledger just going to have one number on it. But the two supposed to be the same. The big number is supposed to be supported by the detailed number. Just like Councilor Crusoe, we just went from those non-major funds, and then we went to saw what make those up and had the community development in there. All those little funds make up those non-majors that we had at the top. The same thing. Here was an instance where it was something that was embedded in the system, didn't capture all the information. And once that was sort of identified, it was still something that needs to be addressed, but it's not nothing that was overwhelming. As a matter of fact, it probably wouldn't even been in there if we had been able to discuss it a little sooner than we had did the second time, because we did have a review with the finance department, and they did have this report for 30 days. And then we looked at it again, and so we didn't see anything different, but it was revealed later on. And so I couldn't take it out. If I could have, that probably wouldn't have been in there, because that's a house cleaning issue more than anything else. But at the time, that information was not put forth. But that's nothing to be overreactionary for. That's been fixed. That's not happening. And all these things that we're looking at now, we will be looking at following up on in the 2020 audit, that they even be able to make sure that the accounting is being done the way that it should be done, so that these things will not occur. And you do have an able-bodied finance director that gave us great assistance in putting this audit together. We couldn't have gotten through in the timely time that we did get through without her department and her assistance and helping us get that done. So I'd like to thank them for their assistance in terms of getting us where we are now. On page 103, this is dealing with compensated absences. Pretty much vacation time and sick time right now is being accounted for by department heads. And then it's turned over to human resources and finance. That is so antiquated. It's all being done on spreadsheets. We would like to see a system, an automatic system get put in place that keeps up with everybody's vacation time, everybody's sick time. And so when people get ready to leave, the state don't let you get so many hours, that you can get paid for. We don't want to just have to go to a spreadsheet, and then we don't want each department to have so much autonomy from human resources that they plugging numbers in for people sick time and off time and turning in. I like that to be calculated off when they punch in. It shows up, it captures it just like it captures their payroll. And that's going to take a process. The finance department is already working towards that, but that's going to be like a phase in, because law enforcement, fire department, they do 20 years and they in, but they pay more for into the retirement system. So all that stuff has to be worked out so that it'll work properly. But that is something that's being done, and that's something that's, you may see this process going forward getting better. But once the system is in place, you won't see this finding in place in terms of a recommendation, because the numbers this year had to actually be estimated. We didn't even have individual by individual, and you could estimate something like that. But when it comes to payroll is something that you really should never estimate, because it lends itself to proper accounting. You only work so much, you get paid so much, you earn so much vacation time. That's just simple. And then you're dealing with each individual, which is why it's so sensitive. So you want to make sure you got each individual's records up to date all the time when it comes to vacation and sick time. The next finding is 19-3. Because the Bessemer, over the years now, have been presenting this audit report 9 months after year end. You've got bond documents that say that your report has to be done 180 days after year end. So within 6 months after year end, you really should have been getting completed with your audit, and then your audit should have been uploaded to the electronic municipal market access system called EMMA. And everyone that has tax-free bonds, governmental bonds, it's required that you load your statements up into that system so that everybody across the nation can see how you're handling your finances, so that these investors in these bonds, which can be individuals, cannot be over concerned that, hey, we bought these government bonds, but it may do a Jefferson County. They not managing things right. We might want to sell our bonds and get out of this situation before it get bad. So that's the whole purpose, is for disclosure to everybody once you get tax-free bonds. And so because Bessemer has not been doing that, Bessemer has this finding. Now, I can tell you why they've been doing it 9 months. 9 months is when the federal government says you have to upload your financial statements for your grants. And so someone over the years, and then there was periods where you didn't have anyone in finance that could really bring all this together to get through on time, extended it all the way out to the final time that you could do for your grants. But that's in conflict with all the agreements that you sign whenever you go out and do refinancing right now. They're going to say roughly 180 days, we want to have your audit report. And so you want to start complying with things that you sign your name to and that you vote and do resolutions on. And right now, I think that the finance department is in great shape in terms of the leadership that it has, in terms of the new accounting system that was put in place, in terms of knowing what needs to be done to get things right on track. And I think in a couple of years, everything can get going smooth and meet all these deadlines like it needs to be done. So I'm confident that can happen. The final report finding is dealing with on page 105, 19-4. This is dealing with those fixed assets that we talked about that brought your assets up to 110 million. Those fixed assets and what was being purchased, all those different numbers have to be in sync. But the fixed assets of the city right now will be being accounted for by an outside entity. And so we're recommending that the city bring the accounting fixed asset program in the house, which is what the finance director has done. And so when they load up the assets now, we'll be able to much more capture the capital expenditures that's we're going to have in our asset ledger. Those numbers going to agree with what we have in the report. And so we will then, everything will be in sync for a city this size. Investments on the move. I mean, you got buildings coming up that's not even yours all over the place. You got more buildings and houses in on some of these streets on the land that is taken up when you go down Morgan Road. So this will conclude. It took a little longer than I wanted to. I'm like a chef that actually like their own cooking. If y'all don't eat it, I eat it. And so I kind of got a little bit more involved in terms of with the questions that were asked. But now I'm gonna stop and see if anyone have anything that they would like to add, any questions that they'd like to ask me, and anything about the financial statements just in general.
Mr.
Counselor,
Pitts,
you've heard Mr. Pitts. One moment, Counselor, you've heard Mr. Pitts. Are there any concerns and or questions at this time? Counselor Crusoe.
thank you, Madam Chair. Mr. Pitts, I know you couldn't go in depth fully throughout the this information that's been provided, but where in here can we look to find the financial stance or status as it relates to Bessemer Utilities and Gus?
Okay. Utilities and Gus. If you go to page 21, and 22, you see the proprietary funds. The Civic Center is considered one as well. So right there, you see Bessemer Electric Service, Bessemer Water Service, Bessemer Civic Center. All those go into what's called the proprietary funds. You with me, Ms. Crusoe? Okay. Now, I want to do something from right there, from that column there, where we got just say the total assets at the bottom and deferred resources are $81,187,796. You flip back to the front to page 14. You see at the bottom, you see that same number, $81,187,796. So this is similar to when we were talking about the non-major funds. If we look at the business type activities, this summarizes it. But if we go to page 21 and 22, that shows the detail of it. That's the total of all those proprietary funds, total assets at the bottom of page 21, $81,187,796. But this shows the detail of what makes that up. Bessemer Water, Bessemer Electric, and the Civic Center. Now we return to page 26. This is where you have Gusser in the airport. These are called the component units because they're actually separate from the city, but the city appoints people to the boards and stuff like that with those entities. And so they are component units of the city. Now, those statements right there, if you go to that bottom where I say total assets at $42,041,978, that total. If we go back to that same page 14 again, component units, all of them summarized at the bottom, $42,041,978. Same thing. It shows the detail, Mr. Crusoe, for to see exactly what these organizations are doing or what these entities are doing within the report where we are now. But the total is only showing up front of all of them. So all of them, rest of them sort of self-explanatory. So now thank you for bringing that out. You know how to get to the detail for the non-major funds, and you know how to get to the detail of the business activities and the component units. If you just want to just break down each one one by one and see, what makes up those grand totals that are at the top, at the front of the financial statements on page 14 throughout.
Okay, Mr. Pitts, I mean, looking at the big number, or looking at the bigger picture, in the event, once I have a chance to sit down and really look at everything individually, if there are any questions regarding the expenses or the, I guess, assets, how can we get a further breakdown of this information?
The breakdown of it comes from those different departments like Gusser or airport or the Civic Center. Some of that would be like in the general ledgers of those entities. And so I did not audit Gusser or the airport. So I could tell you something about some of the other entities, like the library or something like that.
Okay, so without your auditing, you just basically just gave us an overall number for the component.
Well, they were audited by other auditors.
And
so their reports are
you
included.
just lifted the numbers from the other audits and put it in here for just for the sake of, I guess, the presentation with the total component units.
Yes, it's required because you appoint board members and things of that nature. You have a relationship with these entities.
Yes, sir.
Like the library, you give them a nice, part of their budget for the operator over there. So those entities, they have to be accounted for under the city because of the relationship that you have with them.
Yes, sir. Okay, thank you so much.
If you have any questions, but do ask me, and I'll get you anything that I can get you.
Yes, sir. Thank you, Mr. Pitts.
Thank you.
Okay, Councilor Crusoe. Any other counselor?
Madam Chair.
Yes, sir.
Mr. Pitts, good evening, sir.
Good evening, Matthew. I'd love to see you. Appreciate you.
Good to see you as well. And I must say, I've sat through many audits in my tenure, and I must say that this one, the England visit, the two-pronged approach toward that's real good. I like that because it shows both especially when you went down to and showed those business license and talked about the graves that at the Civic Center and the monies that I guess the offsetting of it.
Right. Right.
Yeah, and then you talked about the sales tax and the occupation tax. That's a very, I must commend whoever went over, and I commend you all for taking up this approach because it shows both sides. And then when you go to the bond market, then you have some ammunition there to help you out without a lot of back and forth, because you got to get this, you got to get that,
Right.
It's all laid out right there. Yeah.
And that's why they did it that way. You're exactly right.
Right. Good deal. So thanks a lot, and I'll deep dive into a little more of it. If I have any questions, I'll be in contact.
Please do. Please do.
Thank you, Mr. Pitts. As I stated on our first visit, I must agree with Councilor Matthews. Even I can understand. I've been around this table 7 years, and I've never heard a audit explained in depth as you have explained it to us these 2 meetings. So I truly thank you for that. I thank our finance director and her team for working with you to go ahead and get this audit out, as well as working on the 2020 audit. If there aren't any more questions, if there are any questions by any counselors, you stated that you are available.
Available all the time. Let's see what we're at.
Ma-
7:22. I'm available.
Hey, Madam Chair, I have one
Yes,
more
sir.
question, unrelated, not related to this, but it's related to the next audit that's gonna have, I guess the COVID-19,
Right.
and it's gonna show the entire sector of that. So we're gonna be it's gonna be much different. Am I right?
Yeah. I was sort of told preliminary that it didn't affect you too much, but I hadn't seen anything.
Right.
So it affected everybody else. I expected a lot of other cities. It affected the state of Alabama. And so it'll be good if Bessemer's kind of come out of that pretty good. And we'll know pretty soon. We got it still all fast tracked again.
Okay.
And this time should be even better because, we've looked at what we know what we're looking at now, what we're doing. Much more clear. We won't have to invent all the, the spreadsheets and statements and all that. We can focus on now more on the numbers now. A little bit more.
Okay. Thank you, sir.
Thank you.
Thank you, Mr. Pitts. If there aren't any more questions with this council, we thank you again for your time, counselors. Pray that you got an understanding. If you didn't, Mr. Pitts states that he is available to answer any other questions that you may have on down the road. I need a motion, a second, and a roll call, please.
Madam Chair, I move to adjourn the meeting.
Second.
Roll call, Ms. Taylor.
Councilor Crusoe,
Aye.
Councilor Marshall,
Aye.
Councilor Matthews,
Aye.
Councilor Donald.
Aye.
4 ayes, no nays, the motion carries.
Thank you. You all have a great evening. Bye-bye.
Good night, everyone.
Good night.
Good night.
Good job.